Hello, everyone, and welcome back to Funny Fella Trader. Apologies, I haven't really been posting that many videos lately, as truth be told, I am not really liking the way the markets have been since the start of the year, and that has showed in my trading and also showed in my understanding of the market because right now it's kind of confusing me a lot. It doesn't really seem to be working or moving how I like to see it moving. So at the beginning of the year, I was wondering like what is wrong with my trading here, and it felt like I lost it. But the fact is, I was forcing trades, and even when I was getting my setups that I was looking for, the market just didn't seem to go how I wanted them to go. And then a few bad trades later, psychology kicked in, and started veering off my plan. So I had to take a wee break, like a wee reset, uh, and find the fault in what I was doing. So that's basically what I have been really doing by myself. I like to take myself into my own wee world, and see where my faults are. And ultimately, I would say that everybody should do that. Yes, it's good to be in a wee group and a community and talk to people who's learning and actually learn of people who are established traders. Because you can have hundreds of different outlooks in the market, depending on who is actually in the community, and it can be very confusing and conflicting, and it can make you doubt yourself. So sometimes the best thing to do is to take yourself out of it and focus on you. So that's exactly what I was doing. So I just found, excuse me, I just found, or have been trying to find out, um, my own wee problems. But I'll just do a quick analysis and breakdown of today's trade, 1% win, and show you why I took a quick sell here on GBP USD. So we're on the weekly here. And ultimately, if I went down in the lower time frames, yes, the market has been trending upwards. But taking a closer look, the market has traded up into this fair value gap on the weekly. Okay, we traded up into it once, we traded up into it twice, but as the weeks went on, we started to break down and we actually broke this low. So, as a few people know, what is called a change character. Now, it didn't break it with massive conviction, but it did break it, and it made new high. So that is the impulse. That's the swing low in the market I want to see broke before I start changing into sells. So as I say, on the weekly, yes, we've had that. We've also a fair value gap over here in the weekly, which the market has run up into, and it closed roughly the equilibrium of this wick. And what I believe we might see the market breaking down a little bit more and coming further down into maybe this fair value gap here is where I would like to see the market drew into if we should see a period of bearish movement. But if we move down into the daily, we have this sell side liquidity all built up. That could run into this fair value gap. And we could see a lengthy time of sells. Now, on the daily here, this is where things can get a little bit confusing. We have run in this fair value gap. We started to break down. We didn't manage to break this high, and I think it's actually, what is the height of this candle? It's 24482, 24468. So we have broke the high a little, but from that moment, the market started to break down. So when it broke this swing low. For me, that was the change in the market. And we said the market did come up into this and break down again, broke down again, but started to push back up again, but was just haven't quite broke these highs yet, which tells me that maybe sells are still on the chart. And that was a change of structure, if you remember, change of character out in the weekly. So, having a look, there is a tiny, tiny fair value gap over here. And if you look over to your right hand side, whenever I just show you, whenever we run in and close this fair value gap, the market started to break down again. This is on the 4 hour. And it broke this swing low because this is the push up, final push up. Broke this swing low, so that's when I decided that I might look for a sell today. So just breaking down into the 1 hour. I hope not moving forward too quick or being hard to understand, but you have to break it from the higher time frame down to get you maybe your best sell or best bias for that day. So again, see the market break down. We broke this swing low. We printed the fair value gap. If I just hide this for a moment, from this candle's low to this candle's high, and if you look over to the right, you can see that the market did tap into it. Just for those who need the visual. And we started to break down again. Now, if you look at all this here, this is like a build-up of what I would call positions, liquidity. So I would like to think that the market would like to run through all that now, and maybe take out these lows, this low here at least. So whenever the market did run into this 1 hour fair value gap, breaking down into 15 minutes, you can just see it. You can become a wee bit more particular, a wee bit more accurate. And you can see that the market did start to break down. It swung up into this fair value gap, almost to the high of this. We started to see a build up of orders before we broke down. I'm just going to put on my position, which was this short, and I'm going to put this rectangle in because this was actually a 5-minute fair value gap. So looking at this 5-minute fair value gap, the market built its way up until it tapped into the 5-minute order block. This low here, going down into the 1 minute, this was the highest push really. So whenever I seen this low being broke, that's when I decided I was going to actually look for a sell. So the market came up in after breaking this low, and this time period, I wanted to wait to the London Open, or the New York Open, sorry, which right here is where I entered 2 minutes before it. Was the best entry in the world? No, it wasn't, but for me, this fair value gap in the 1 minute here, it just looked like the market was stacking orders, and it didn't break this high. So whenever it started to break down, it broke this low, I waited until I seen a little bit of a pullback into this fair value gap here. And that is when I entered the market. Now, just to bear in mind, in the back of my head, I realize there's buy side liquidity over here. And I also actually saw this break structure wrong one. Buy side liquidity was taken out, and I wanted to aim for these equal lows here. So sell side liquidity. So if we take a look where the market came up, it run into this 5-minute order block. It started to break down. It broke this swing low, and I know it doesn't look like much, but when you start to see things, this candle, even though it doesn't show this was a bearish candle, this broke the low of that candle, and then it impulsed up, and then it started to break down, and this candle here ultimately broke these lows. So for me, whenever I seen this fair value gap up in here, I actually change the color of that to make it a little bit more. So whenever it started to run up in, and then eventually start to break down again, and this became my new fair value gap that I was interested in. This candle's low, this candle's high. Let's make it a little bit tighter. I actually entered on the close of this candle, but my spread took me down to here. So I went to 1%, 1 to 1, 10 pips to 10 pips. Could I have went further? Yes. Went for 13 pips. Yes, I could have, but 1 to 1 was ultimately what I was after. So again, I'll just go fix this back up 10 pips. Almost. I want the market to come down and take out this sell side liquidity. Now it looks like obviously it's going to possibly go further, but say I've been a bit struggling with the markets and understanding, and it has been a bit sporadic. Speaking to other traders that are a lot better than me have been struggling also, and these are fully fledged, don't really need any money anymore sort of traders. Trading to them is boring. It's something they've just become used to, like riding a bike. But even speaking to them, it kind of gives me a wee bit of like a morale boost. They've been saying, yes, this probably has been the hardest period ever to trade. And it's been a little bit sporadic, a little bit off what they're used to. And because I get hit with a few runs of bad trades, didn't lose big money or nothing. Like I was losing like 0.25 and 0.5, nothing more than that. But it added up and added up. I started to doubt myself and started entering trades when I shouldn't have, and just absolutely messed my psychology. And I ended up paying the price of slowly breaking down my account. Now I still have loads and loads of drawdown available in my account, but that's not the point. I knew there was something wrong. And from listening to professional traders, I knew that was time to switch back onto my demo and fix this fault. So I'm going to show you now what helped me fix this fault was just by using the DAX. I'm not saying it's fixed yet, but it's given me an idea just looking on the daily. This is a new swing high that broke this high. So whenever the market came back down in to this little gap here, if I do it on the 4 hour, this order block, we'd seen the market tap into this order block and then ultimately started to push up again. Now I'm just going to quickly go down to 15 minutes. This was the order block. This is where I timed the market to tap into this, going into 1 minute. Go into this equilibrium of this last down candle. Market tapped in, broke these highs, and then it came back up, broke more highs, and ultimately when the market came back down into this order block is where I used to enter and timed it along with this order block here. I know right now I'm a bit shit at explaining what's going through my head, but I'm just trying to keep it pretty simple as not to confuse anybody. If I was just to strip this all back, what did I start from? I started from the weekly, the daily, and worked my way down. Seeing that the market took out buy side liquidity, I seen that on the 5 minute, it had run into a 5 minute order block, and it reacted off that order block. The moment it closed it in, we got a good bearish candle down. It printed for a value gap. It did come back in. My entry could have been up here because I seen it break this low, but I just wanted to make sure. And what I also wanted to do was try and time it with the New York Open, the kill zone, as ACT would talk about. And that's ultimately what I did. Now, the moment I entered, yes, it did take off. I wasn't too concerned because I see this for value gap in here also. I hope you can see this on the video, but and I was prepared to let the market pull up into that there. I didn't want to see this high broken, so that's why my stop loss was up here, allowing a bit of a spread. If it had been above that, then yes, it would have been wrong. So it spent almost the most part of the trade in drawdown, but it couldn't push up past this. And then, especially when this candle here printed and broke this low over here, then I had a good feeling and I came back, retraced, fell in this fair value gap and started to sink. Now, it started to fluctuate here, we bit what to expect. That's what the market does to try and scare you. And from that moment on, it broke down and nicely gave me a one-to-one trade. Could I have went further? Yes, it could have. But as I say, I'm just trying to fix something that's wrong with my trading. And I know it's a lot to do with psychology. I know it has because a lot of losing trades was me closing trades too soon because I started to get that fear of losing. And because I was only losing tiny bits, it all added up. I was losing small and winning smaller. And that is not trading. That's just falling into that trap of the fear of losing, and that's not a good thing. So it's really good though to hear previous, traders that are fully and utterly established telling you that they've been through this before as well, and that sometimes you have to take a step back and go back in the demo, and see where you're going wrong, and ultimately claw yourself back and break even in your account, and then concentrate on just steadily building it up again. So that's what my goal is right now. That's my goal, to come back from this, come back from a drawdown. Which I'm not ashamed to say I'm in 4% drawdown, and I haven't been in that in my life. So it's uh it's a new challenge, a new curveball for me, and one that I'm going to enjoy crawling back from, however I do it. So if it means taking a step back and being patient again and figuring out where I've been wrong, then that's what I'm going to do. So if you're in the same kind of boat, if you're struggling with your trading, trust me, guys, you're not alone. Every trader goes through this, I believe. They have to, because nobody picks it up this quick. Nobody. Very few even get it. But I've seen so many traders time and time again go into this kind of drawdown, and next thing they open the risk. Like the risk from what they would have risked maybe 1% or 0.5%, they're now risking 2-3%, and that's nuts. Like, if you're in a losing streak, why would you risk more money? Why would you not stop trading if you have to for a week or two? Figure it out. Be patient. It's kind of embarrassing too. I get it. It's like you feel like you've made it, and I would think, like, this year I started this year with my live account. This year I feel further away from trading than I did whenever I was demo trading. I feel like I am greener now than ever I was, because I thought, yes, this is it. This moment, I've got this now. Let's stay calm. You know, I know all the ins and outs. I know what's going to happen in trading. Like, I know there's going to be challenges ahead, but it did completely break me down to the point where my trading was so sporadic. Even though the markets have been a bit sporadic, but it's not an excuse. I was sporadic, and it broke my whole psychology down, and I was not doing the right risk management to the point where I went too small. Like, I wasn't risking 0.5%. I was risking 0.5% over maybe 20 pips instead of 10. So really only 2.5. And my take profits was a lot smaller because my lot size was too small. So I've had to swallow my pride, take a kick in the bollocks, um, and be the market's bitch again for a wee while, if that makes sense, until I figure it out. And yeah, so I don't know so much if this trade will help anybody, because look, it's so messy in there. Like, and among all this, yes, there is fair value gaps, but it's still messy. Like, there's no clear indication that this swing low has been broken. It's broke, but it hasn't closed below it. It has come back up. It hasn't respected the fair value gap. It just pushed on through it, and it didn't even really respect the body of this last bullish order block, as you could see. And it almost pushed above this. So the market's been pushing deeper at times, I've noticed, putting me off. And, like, again, there's a fair value gap in here. It hasn't respected that. It's just pushed on through it. Another one pushed on through it. And it's been a bit all over the place. But again, if that means I have to adjust to find my strict plan again, then so be it. But I refuse to do that on a live account. I will do it in a demo and take what knowledge I've learned from that into a live account. So I hope that's helped some people. I hope you maybe learned something from my mistakes, or what I felt I've learned from it. And yeah, start clawing your own drawdown back. So thanks for listening, and we'll chat again. All the best, funny fella trader.